Read from two market pros right now on what to make of these first 100 days and how the next 100 days look and the next few years in this administration. Carol Roth joins us. Veronique de Rugy, did I get that right?
Yeah,
please tell me.
close enough.
No, I understand. People call me Cavato, or if you're Kurt Russell, it just you're waiting for it to come to you. Ladies, thank you both for coming. Veronique, I'm looking at this. I'm looking at this run-up, and I'm wondering, technology had been a life force of its own, even without Donald Trump. But obviously, it's been more the wind at investors' back. When you see that type of technology run up, when you see someone like a Jeff Bezos see his market worth appreciate by $10 billion in a little more than 10 weeks, do you ever say, like, all right, this is getting a little heady, I'm getting a little worried?
I mean, this is the market, right? It has ups and downs. As long as it doesn't fall much lower than when it started growing. Listen, I mean, the market has a lot of reasons to be excited about the promises of, I mean, the unique promises that, and an extraordinary focus on deregulation, which we've never really seen before. Right. The promise of tax reform. There's just a lot of things that the market rightfully is excited about. And now the question is how you turn the excitement about real things that change, that turn the GDP around. And yeah, even if the economy is growing, there will be ups and downs. The things that you want to avoid is like the big swings, right? Yeah, no, and I think that if he delivers, if the President and Congress deliver on those, even if we just get corporate income tax reform and deregulation, I mean, this economy will be on much more solid ground, and we will have much less to fear about the big boom and bust.
You know, I'm glad you had mentioned it. Carol, pick it up with you on the regulatory front, because we talk about a president who hasn't had any legislative victories. Actually, on the regulatory front, he took his memoranda to the extent of getting majority approval in the Senate on some of those regulatory overhauls, a little announced and with little fanfare. But it stands to save businesses, you know, anywhere from $80 to $100 billion over the next 10 years. I know we live in a multi-trillion-dollar world where we just say, all right, well, that's chump change. But it's significant chump change by that definition. What do you make of that?
It's significant chump change, as you put it, Neil, but it's also part of the confidence and part of the pro-growth environment that is being created for businesses. Right now, businesses have that type of confidence that they're willing to start making the investments that we haven't seen on a capital basis in a long time. And that is going to benefit sectors like technology that have not only the cloud and lots of growth in the cloud ahead of them, but things like the Internet of Things, artificial intelligence. Those are going to continue to be propelled, and having that type of regulatory reform is just going to boost the environment, but whether Carol, it's from a small business perspective or a big business perspective. I'm
sorry, Carol, but I interrupted you anyway, didn't I? So my apology is a moot point. But Carol, what if we don't get the tax cut thing as soon as many people want, or for that matter, the health care thing straightened out as soon as a lot of folks want, or worse yet, it's put off until next year?
I think that that's going to have a big effect on both the market and the economy. From a market standpoint, not only are we expecting tax reform to boost that type of capital spending and consumer spending, but things like repatriating all of that cash that these companies have overseas that can come back in terms of dividends or investments. I think that that is a huge expectation. And if we don't get that reform, and this is to me on Congress, Congress needs to get it done, because if we don't, that's going to have a negative effect on the market. It's going to have a negative effect on consumer psychology, on business psychology, and it's going to become the self-fulfilling prophecy that puts a damper on all of this wonderful confidence that we have about the economy.
You know, Veronique, when you look at this, I'm always impressed with how the markets have advanced, even with these delays, even with this division, even with this fighting among Republicans. So either they're cockeyed optimists and convinced and betting very real money that it'll all work out, or they're just high as a kite. What do you think?
I mean, maybe they're a little too optimistic, but I'm not sure. But I think, come on, if I had to put money on whether there will be tax reform, I would, and I'm not a betting person. I think they will. I mean, that would be the biggest missed opportunity if they don't. We've already got some deregulation. That's really important. And one of the aspects that we don't talk about is the change in the way the administration, compared to the other, is thinking about innovation. You have, I think, the technology industry, they understand that this administration is probably more likely to think in terms of permissionless innovation. Just go and do the stuff you have to do, rather than this precautionary principle where we have to kind of actually stop you before you do anything to prevent every risk. And that alone, I think, is a powerful drive for investors. Now, they have to deliver. Again, there's what they feel and the excitement that they feel, but there's a moment where they need to turn it into real economic growth.
All right. We'll see if they do, because that, you're right. In order to keep this going, they have to have a convincing reason that it should. All right. Ladies, thank you both very, very much. And again,